You know, it's pretty amazing to think about the financial world over, what, the last decade?
It's been a wild ride.
Yeah, because 10 years ago, if you even mention the word crypto, people, they basically picture two things.
Right. Either shadowy dark web transactions or, day traders just glued to these crazy volatile price charts.
Exactly. It was purely speculative. It was fringe tech.
And that perception was, it was completely valid back then, but look at the landscape today.
And recognizable.
It is. The shift is so profound. We're not talking about some obscure token anymore. We're talking about real global financial infrastructure. You've got massive institutions adopting it, entire countries building payment systems on stablecoins, and global services being delivered completely outside the old banking monopoly.
But that transformation from that niche speculation to, well, to essential infrastructure, that's the pivot. And here's the core insight we pulled from all our sources for
That
you.
is the key.
The biggest financial opportunity right now isn't in building the next great blockchain. It's in distribution.
Exactly. We've entered this totally new phase, and the high-growth business model is all about the human element. We're talking about the Web3 Ambassador.
Ordinary people.
Ordinary individuals who, just by leveraging trust in their community, are literally becoming the essential digital financial service providers of the future.
Welcome to the Deep Dive. Our mission is to analyze this whole 10-year transformation and show you, step by step, how this new ambassador model is perfectly positioned to capture all the growth of the next 5 years. So let's unpack the history first. Context really matters here.
It does. To really appreciate the power of the ambassador model today, you have to understand the journey. We can sort of simplify the last decade into 3 pretty distinct eras of crypto adoption, and each one is marked by a totally different user motivation and, well, different problems they were trying to solve.
So era 1, that would be the speculation phase, roughly what, 2014 through 2017?
Yeah, that's about right.
This is the Wild West. This was the original get-rich-quick mentality, fueled by the ICO boom, the initial coin offering.
People just bought digital tokens hoping the number would go up. That's it.
And the key deficiency here was, it was blindingly obvious in hindsight.
Zero real-world utility.
None.
You could buy this asset, but you couldn't actually do anything with it. The only use was watching a price chart. It was a playground for the brave, maybe the foolish, but it wasn't a sustainable system for global finance.
So that led to this massive and I think necessary pivot. Era 2, the utility phase, let's say 2018 to 2022.
Right. This is when the engineers, the builders, they realized they had to create functional platforms.
This era gave us things like DeFi summer, right? Decentralized finance, NFT, smart contract.
Exactly. This was the proof of concept era. We proved we could actually lend, borrow, earn yield, and create digital art markets without a bank in the middle.
But, and this is a big but, for you, the average user, this phase was still way too complicated.
Oh, totally intimidating. You needed deep technical knowledge. You had to understand things like gas fees and navigate these, often buggy, complex interfaces.
So we had the tech, but not the user experience.
Yeah.
And that brings us to where we are now, Era 3, the infrastructure phase, which started around 2023.
And this is, I think, the most fascinating transition. This is where crypto is intentionally designed to become invisible.
What do you mean by invisible?
Invisible means the end user gets all the benefits, the speed, the low cost, the transparency of the blockchain, without ever having to think about the blockchain itself.
Okay, so it's like using a ride-sharing app.
Yeah.
You don't care about the GPS satellites or the API code.
You just care that the car showed up quickly and cheaply. That's it.
Right, so Era 3 is about hiding the complexity to deliver better, faster, cheaper financial services. Things like instant cross-border stablecoin payments and tokenizing real-world assets.
And that massive shift is what fundamentally redefines where the money is made, pushing us right toward this distribution model.
Okay, so that infrastructure shift is why our sources are saying the 2025 to 2030 window is set for, well, explosive growth.
It is. It's driven by 3 big technological convergence points that are creating kind of perfect market conditions.
Convergence number 1. AI meets DeFi. This sounds like a buzzword, but it's where finance goes beyond simple programming and into sophisticated autonomous management.
Think about yield optimization. Historically, to get the best interest rates, you had to constantly monitor dozens of DeFi protocols, check rates, manage collateral, and manually move your money around.
Which nobody has time for. It's a non-starter for 99% of people.
Exactly. Now imagine an AI agent operating on the blockchain. that can automatically execute these complex strategies for you. It rebalances your portfolio in real time across multiple chains to find the absolute maximum safest yield.
So it's the democratization of financial intelligence.
That's a great way to put it.
The kind of algorithmic stuff that was always locked up in Wall Street hedge funds suddenly becomes a service accessible to anyone with a digital wallet.
Right. It eliminates all that manual work. Okay, convergence number 2, real-world asset tokenization, RWA. This is not a buzzword anymore. It's happening at scale.
This is where things get really interesting.
We are seeing trillions of dollars in traditionally illiquid assets. Things like fractionalized U.S. Treasury bonds, corporate debt, commercial real estate being packaged as tokens on a blockchain.
And the impact isn't just about convenience, is it? It's more fundamental.
It is. Tokenization means you take a building that used to require weeks of legal paperwork and banks to transfer, and you turn it into a piece of code that can be traded instantly, 24/7, anywhere in the world.
And you can use that little piece of the building, that token, as collateral for an immediate loan. The whole financial system becomes programmable.
And finally, convergence number 3, which is absolutely crucial for the ambassador, stablecoin payment infrastructure.
This solves the biggest problem crypto has always had.
Volatility. Exactly. Stablecoins like USDT or USDC, they offer the instant settlement, the low fees, the global reach of crypto, but without the wild price swings.
Which is critical because it moves them from being a risky investment to being a simple transaction tool.
And the true significance here is that major global payment companies, we're talking Visa, MasterCard, and even sovereign countries, are integrating stablecoins for cross-border settlements. This isn't a curiosity. They're becoming a primary, high-speed, global payment rail.
So they're bypassing the old banking systems that took days and charged huge fees.
Right.
Okay, so if the tech is becoming invisible and the big players are adopting the infrastructure, why do we even need a human layer? If it's all automated, doesn't that just create new central points of failure, kind of like the banks were supposed to be replacing?
That is the essential question. The technology is excellent, but it suffers from a massive trust gap and a huge education problem.
Right.
For the last century, financial distribution was geographic. Banks needed physical branches, tellers, all that expensive infrastructure, and that model created massive barriers.
And massive exclusion.
Yeah.
We still have 2 billion people globally who are unbanked.
But here's the paradigm shift. These same unbanked populations, they increasingly have smartphones, and they're incredibly active in trusted digital communities. Telegram groups, Discord servers, following local influencers.
That digital community is the new global distribution network.
And the ambassador model bridges that gap. It connects the perfect invisible technology with necessary human trust. Instead of spending millions on buildings, financial platforms partner with individuals, community leaders who already have trust and reach in those digital spaces.
So the ambassador isn't just like an affiliate link. They're acting as the trusted human interface for these complex services.
Yes, you're leveraging existing licensed banking as a service platforms. Your value is providing the education and the support. You become the local expert on digital banking.
What kind of specific services are they helping with?
Things like setting up digital IBAN accounts, which is the crucial bridge from traditional business payroll onto the crypto rails. They're facilitating USDT payments, using the crypto on and off ramps to safely convert local currency, and even onboarding local merchants to accept digital payments.
So that's the utility. Let's get tactical. You mentioned revenue share. What do the sources say about the actual financial mechanics here? How does this work?
So platforms offer recurring revenue shares, usually between 20 and 60% of the fees generated by your network. The key phrase is recurring and compounding.
So it's not like a one-time affiliate commission.
Not at all. You're earning on every single transaction for the lifetime of that user or merchant. You're building a passive asset.
Let's break down the 4 key revenue streams then. So stream 1, account creation fees. This is the simplest one.
Right. You earn an upfront setup fee, maybe $10 to $30, every time someone in your network opens a digital IBAN account or a crypto wallet through you.
Okay, that's the seed money.
That's the seed money. The true passive engine is stream 2, transaction fees. Here, you earn a small percentage, say 0.1% to 0.5% of the transaction volume every time that account is used. For payments, transfers, conversions, anything.
And the mechanics here are surprisingly powerful because of the scale, right?
Yes. Let's run a quick scenario. Imagine Maria in Manila. Maria starts with, say, 150 active users in her small business community.
Oh,
If each user averages $3,000 in monthly transactions, which is conservative for a small e-commerce business, that's $450,000 in total monthly volume.
wow.
Earning just 0.4% on that volume is $1,800 a month in passive income, just from user fees. That's a foundational income stream that scales without her direct hourly effort.
Okay, what's stream 3?
Stream 3 is about business adoption. Merchant onboarding. When you onboard a local merchant, a restaurant, an online shop to accept stablecoin payments, you generate dual income.
Dual income, how?
First, an initial setup fee, maybe $100 to $500, and second, the monthly recurring share, 10 to 30% of their payment processing fees. You've essentially created a lifetime revenue share every time they sell something.
And stream 4, which you said is critical for emerging markets.
Absolutely. The crypto on and off ramps. You are the trusted guide helping users safely and cheaply convert their volatile local currency into a stable asset like USDT and then back again when they need it.
And because local banks are so inefficient, the spread on those conversions is pretty high.
It can be, often 1 to 5%. As the ambassador facilitating this, you capture a meaningful piece of that spread, creating high-frequency revenue.
So let's put it all together. With some conservative math, what could a moderately successful ambassador expect to earn?
Someone who achieves, say, 250 active account holders, maybe 20 merchant relationships, and facilitates $150,000 a month in on-off ramp volume. They can conservatively expect to earn between $8,000 and $15,000 monthly. It is, and it's important to note, some platforms advertise up to 60% revenue share, but those figures are usually for people generating millions in volume. A realistic starting share is closer to 20 or 30%.
But the incredible part is this income scales linearly just by doubling your distribution.
Yeah.
And you have no inventory, no tech debt, and the platform handles all the core customer support.
Exactly.
So who is the ideal person for this? What kind of characteristics do the most successful ambassadors seem to have?
The number one characteristic is trust and reach. It's not necessarily technical expertise.
Okay.
Yes, Web3 and FinTech enthusiasts who are comfortable explaining digital wallets, they excel. But the real game changers are the people who already have a distribution network.
Influencers, content creators.
Exactly. Key opinion leaders who have an audience that trusts their financial recommendations. We're also seeing huge success with Telegram or Discord community owners.
Because they're already the go-to person for questions.
They are. And also affiliate marketers who get how to track KPIs and optimize conversions. And finally, borderless entrepreneurs, digital nomads, they get it because they live the pain of slow, expensive global payments.
But the most crucial thing is, even with zero crypto experience, if you have a trusted network and you're willing to learn, you can succeed. The platforms provide training.
They do. Comprehensive training.
So if you're listening and you're ready to move, what's the practical blueprint? How do you actually get started?
The roadmap is really about minimizing risk and maximizing trust. We can distill it down to a simple 3-phase structure. Phase 1 is foundation.
Research.
Research and compare the different ambassador programs. Choose 1 or 2 platforms that align with your community's needs and then complete the application.
Phase 2 is education. This sounds non-negotiable.
It is. Take the platform training. It might only be a few hours, but it gives you credibility. Then test the services yourself. Create your own wallet, make a payment, develop your unique value prop. Why should your community trust you over just some random internet search?
And phase 3.
Launch and scale. Start small. Create educational content that focuses on solving problems, not on the technology. Launch your existing network first, not cold leads. And track your KPIs, signups, volume, and just optimize what's working.
And the good programs provide tools, right? Like calculators and templates.
Yes, the serious programs provide income projection calculators, marketing templates, and peer communities so you can learn from others who are already doing it.
Okay, so here's the final thought I want to leave you with, because it really connects the whole history to the opportunity right now. The 500-year monopoly that traditional banks held over trust and infrastructure is, well, it's fundamentally broken. The technology DeFi, stablecoins, tokenization, it's ready. It can deliver almost every financial service faster and cheaper.
The only missing piece is the human interface. The tech provides the speed and the low cost. The ambassador provides the trust, the education, and the community support. This is a chance to be the foundational human layer that actively banks the next billion people who were left out by the old model.
And if you're a skeptic, we just urge you to look at the data, not the hype. Our sources cite over $150 billion in stablecoin market cap. Major institutions are launching tokenization platforms.
Payment giants are integrating these rails. This is not speculative digital gold anymore. This is hardened global financial infrastructure.
It's that historical analogy playing out in real time. This is our 1995 moment, choosing the speed of email over the fax machine. It's 2005, recognizing that online shopping would replace them all.
And those who recognized that foundational shift early on in the internet age, they built profound freedom and wealth for themselves. The opportunity to be early is now, before this distribution model gets saturated.
So we want you to take 3 actionable steps today. 1. Educate yourself this week on the basics of DeFi and stablecoins. Just understand the core infrastructure.
2. Join the community. Connect with the Web3 Ambassadors Hub. You can reach out directly on Telegram at PAO-Web3. That's PAO_Web3 to get the resource toolkit. It has platform comparisons, a setup blueprint, everything you need.
And 3. Start small. Help one trusted friend set up a digital wallet for their finances, or onboard one local merchant to test the payment model. Don't wait for the market to give you permission.
Take action today. The future of finance is being distributed by people just like you.
We'll see you in the next deep dive.